influencers and on YouTube and all the rest of it that people are sort of holding off buying Bitcoin and Ethereum because they reckon that we're not actually at the lowest price at the moment. I know we did under 1,000 recently, but they reckon that it may get lower. Like, what are your thoughts on that?
Well, I'm not sure how many premium subscribers we have listening, or we're actually making a video with this one this time so people can recap, but I haven't been sending hardly any premium signals at the moment just because I'm not sure if the dust has completely settled from all of this just yet. And especially with things like, Bitcoin just broke out of the ascending channel that we were in for the last week and a half to the downside instead of bouncing right there. Definitely, if there would have been a bounce causing a higher low, it would have been a much stronger reaction from the market. But since we broke through this ascending channel, which are inherently bearish patterns, it's just tough right now to be launching a bunch of signals saying, all right, we're starting to go in again, where we're at like 20,000, 19,000, because it's just technically there's no reason to be doing that. There's no bullish divergence. There's no hidden bullish divergence. There's, the oscillators are all in the bearish control zone. So kind of just been holding off, for the time being. And I think that's what a lot of other analysts are doing because there are so many bearish factors in the marketplace right now. And it's largely locked to the S&P 500 at the same time as well. So until we see the S&P turn around, it's kind of hard to start launching a bunch of signals saying, all right, we're, getting ready to maybe reverse this trend. And then today, this weekend's a holiday weekend here in the United States, so markets will be closed tomorrow. So we kind of just have to wait and see what happens this week. But consistently, there's been lower highs on the S&P 500 for going on over 6 months now. So, which has been forming a descending broadening formation, which those get weaker over time, which I'll drop here. I'll drop another screenshot in the chat. But yeah, descending broadening formations get weaker over time. So eventually, there'll be a selling climax to where there won't be more market participants continuing to sell abroad like they have been. Pretty much just kind of in limbo at the moment for a lot of markets until things start to turn around in the traditional markets, I think. Didn't used to be correlated as much back when cryptocurrency first started or even like a few years ago. So now it's pretty correlated to traditional markets. So until we start to have some sort of nice turnaround on like the traditional markets, I think we're kind of sitting in the same boat with cryptocurrency.
Yeah.
Interestingly enough, on that same topic of what you were saying, Chris, about there being a lot of fear around buying Bitcoin, particularly right now, on the 29th. Last month, Michael Saylor actually purchased another 480 Bitcoin for about $10 million at an average entry of 20,817 per coin. So that's, there's been a lot of speculation around how far down their loan for Bitcoin can go at MicroStrategy before they require additional collateral. And he actually just came out recently and made a statement that said Bitcoin would actually have to drop down to $3,562 a Bitcoin before anything like that would actually end up happening. So that's around the time they'd be facing margin call.
And it brought his average. Sorry, go ahead. I was just saying it brought his average entry around $30,664 is now his average entry.
Yeah, currently MicroStrategy is holding $2.6 billion worth of Bitcoin in their ETF.
Yeah. It's such an interesting thing because you see some people saying, no, don't buy, but then I'm looking at even an article now post in the channel about Glassnode who do on-chain analysis. They're saying that latest on-chain data is showing that wallets with over 1,000 Bitcoin have been stacking BTC at a remarkable pace. These guys are buying up to 140,000 Bitcoin a month. So, you know, it's still it's interesting, and it sort of correlates with what you said about Michael Saylor. You know, buying more because it seems to be a good buying time for those looking at stacking.
Oh, absolutely.
For sure.
Most of the premium signals I've sent recently have either been Bitcoin or Ethereum or a couple other top cryptos, but that's essentially the idea of what we're going to start doing in the near future, is just continuing to, you know, add back into Bitcoin, Ethereum, and the top cryptos, and then when things really start heating up and getting frothy again, then we'll look at the, you know, lower cap coins on our list for trading. Especially for the type of trading that premium is, for example. I keep going back to that because that's like the longest term trading we do. You know, can hold positions for 500 or more days, depending on what's going on. So, yeah, that'll be the plan. Start with the big boys and then continue working back down into the other coins after that. It's also just been a little bit, you know, with the whole Celsius thing and then Luna being a failed experiment, there's just a lot of negativity in the market right now. So when that happens, it tends to stay flat and sideways for quite a while.
I have noticed
just probably a question.
Oh yeah, go for it.
The tone. Just based on, you know, Voyager, Celsius and all that sort of stuff, I saw on the news yesterday that Voyager, again, which is another similar sort of organisation, is blocking withdrawals, and they've put a notice out to say, you know, smaller exchanges and things like that, just be careful because there's a lot of organisations in liquidation at the moment just due to the fact that, you know, we're in this extended bear market. Like, what are your thoughts on that, Tony?
You know, that's a tough one. I'd say, honestly, most of the big exchanges I feel like aren't too big of a concern at the moment, but then that is, you know, also, that's one of the risk factors of exchanges in general. Anyways, honestly, I kind of think it's smart to just stay away from small exchanges, no matter how the market is. You know, there are a dime a dozen out there. You can find hundreds of different exchanges out there, but you know, like it's just, you know, one of those times where it's even more prevalent to want to stick with the bigger guys. You know, like, you know, what we use here, as opposed to, you know, Joe's exchange. So I think there's a lot of, you know, a lot more people are starting to notice that sort of situation occurring when the market drops down lower like this, that smaller exchanges can liquidate.
Well, and I would also add to that saying, you know, there's a lot of companies out there, like, let's just say like Nexo, for example, that are like collateralized loans, you know, or Voyager, like the one that you were just talking about. They also do that kind of thing. So it's like, you know, those types of business models where people can, you know, lend out their crypto, but then ultimately can get liquidated if the price goes low enough. I think that's kind of a dangerous thing to participate in. Now, something like any of the exchanges that Crypto Hopper partners with, those are like well vetted, you know what I mean? So you can still do lending and staking and everything else on like KuCoin, for example, you know, and they're one of the larger exchanges with better security. Top security measures. You know, they don't keep their users' funds on the floor. They have them in hot wallets for trading and things like that. So, cold storage wallets, and then they use hot wallets for trading. So, you know, just doing your own research into the exchanges that, or, you know, companies that you're, you know, have your crypto on their exchange, because not your keys, not your crypto is a classic saying, right? But in order to do bot trading, we have to be interacting with some sort of exchange. So, you know, I've always preached like 80 to 90% of my funds are held off exchange on cold storage as just holdings, and then, you know, trade with, you know, 20 to 30% of capital just to be as safe as possible. So, I mean, all things to consider. I think we could probably open up the floor for questions if anybody has any. There's only a couple people in here, but if not, we can just kind of keep having our own conversation. There was more people in here, I noticed a little bit ago, popping in and out. And like I said earlier, we are just gonna turn this guy into a video so that we can have a good recap of some of the important things we talked about.
one interesting thing people have also been sort of staying away from is the DeFi sector. I've noticed recently. There's another hack that happened a few days ago that was directed at Harmony, and now most of the tokens have been recovered from this, I believe. But there was a loss initially of $100 million US. I believe most of which was in Ethereum tokens. So I'd say, between that and, the same sort of things we've been seeing with like these like high return lending DeFi apps, that's just another one of the factors that's been kind of putting a lot of fear into the market. But it's also kind of driving people more towards like the centralized sort of exchanges that we use for our products. And that's where you start to see the centralized sort of things starting to really take a foothold. And then, you see the DeFi type programs and like, the more radical experiments like that, that's why those tend to do better when we're at the top.
Or at least in upward trending market. Everything does well in an upward trending market. It's right now where we'll see things that may or may not survive the next rounds. All right. Any questions at all, friends? Chris, do you have anything else? We've got like 10 more minutes here.
Not that I can think of. I'm just obviously keen to see the bear templates and that in action. I know that you're obviously working behind the scenes to get that done. So, but maybe no other questions from me at the moment.
Yeah, and just to reiterate for the bear templates, I'm so cautious about releasing products to people. It usually takes months and months, so we'll get it done in its due time. Just have to make sure everything's tested properly and working correctly, because those triggers can be tricky for sure, especially when they're like switching between templates and we have to give people instructions and things like that. So and it's not going to be like terribly different from what we're already doing, just a slower, steadier pace kind of mindset, just switch between templates to speed and slow your bots up and down depending on what's going on in the market. So they're all going to be revolved around Bitcoin's price action, since Bitcoin is the market oscillator. So that is one part of how the templates will switch, is they'll be triggered off of movements of Bitcoin. So yeah, I mean that's pretty much it. Unless anybody has any questions, I think we might just call it here, and I'll add an event for next week, and we'll do it again next week and kind of just go from there.
Yeah, well, here in a little bit after, a little bit of cleaning up, we'll go ahead and throw this video in the AMA chat as well. So it should appear a few places after we post it, so you can find it on YouTube. But we'll put a direct link also just into the AMA chat.
Awesome.
All right, friends. Well, have a good rest of your week, and tomorrow's July 4th for us, so we're gonna go boating with some friends and do some grilling, and we'll see you later this week.
Sounds good.
Awesome.
Thanks, guys.
Of course, thank you. Have a wonderful rest of your day, everybody.
Bye.